Aloha and welcome to Java. Thank you kindly for joining me. It's December 9th, 2024, extraordinarily early on a Monday morning. We've got a lot of things going on globally that are affecting not just the markets, but a lot of the commodities abroad. We're going to cover a brief amount of that. If you missed my market segment yesterday, you might want to take a look at that one, but we are going to focus on the markets prior to the open this morning and a few of the movers that are in there. Now, we are in the second week of December, in the midst of what is normally the Santa Claus rally, and we've got the Fed meetings coming forward. So with all of this going on, let's go straight into our favorite risk indicator for the markets. Now, the MMRI sitting at 274, and as I was saying yesterday, relatively stable considering all of the things that are going on at the moment. So with this, the relative strength of the dollar under 106 again, and we've got the 10-year yield slightly declining at 4.167 at the moment. So just a bit weak. Now, that affects the other markets in relation to it. We've got some currency issues going on. We'll talk about that in a moment. Now, fear greed meter at the end of Friday is in the midst of neutral now at 53. So we've got a lot of retailers taking off to the side a bit more. As I was saying yesterday as well, many more are taking to either short-term positions that they can liquidate quickly or cash positions overall. Now, Warren Buffett has kind of set this precedent. He's sitting on a pile of cash at the moment, even though it is being worn away by inflation. It's kind of the position to be in right now. Now, with cryptocurrency, Bitcoin has pulled back from the 100,000 level, but it's still above 98,000, still looking quite strong and staying in this territory. It's kind of grinding out and setting a level here of buyers and sellers. So it's actually building strength for the next move. We've got Ethereum and XRP both also still in pretty high range at the moment. Now, with stocks, it looks like we've got more volatility in right now with the Middle East tensions. They're pumping crude just a bit, also with the supply demand, as well as a slight bit of fear trade here. We've got gold and silver up along with the volatility or fear index. So with this market, we've got futures looking slight bit weak. Now, with this, as I was saying earlier, we've got some currency flows that are also affecting these. China being the first one. Now, they have ramped up their stimulus policy, meaning they're going to have more easy money into their economy. They're pumping in. Now, this is pumping their stock market, and that tends to bleed off the United States stock market a bit as money flows back towards where they can get yield. Now, the European Central Bank is holding its final policy meeting this Thursday. So that is also having a little bit of an effect. We are looking forward to our Fed meeting, and policy rate decision is next week. So this week we're looking at core CPI, but not until Wednesday, really. So let's take a look at the calendar. Today, really not much wholesale inventories. And then tomorrow, prior to market open, we're getting a couple of other reports, but nothing majorly market moving. The markets are really hesitating on Wednesday or external events. Now, we've got stocks on edge as they're waiting for inflation data. That is the CPI Wednesday. Supermicro and Palantir are two of the stocks that are moving this morning. Now, with this, keeping an eye on what China is doing as far as their stimulus, in the background, they are buying gold hand over fist, so to speak, and bolstering their reserves. Now, if they continue to do this, they could actually have a backing for all of this inflationary currency move. So as long as they've got commodities in a backing, they can continue to do this. They are also, even though it's not pegged to the gold, it does give legitimacy to the sovereign backing for their currency. So keeping them floating for now, at least. we've got the National Center for Public Policy Research proposing Bitcoin treasury to Amazon. Now, I've put this in here because this particular story is talking about Bitcoin actually performing better than Amazon as far as the stock. So this is in a comparison to MicroStrategy because their stock is booming because, of course, they purchased and are holding a large amount of Bitcoin reserves. Now, this is based on the asset holding. Now, I wanted to compare that with the holding of gold because they are now proposing a Bitcoin in the treasury for the US reserves as opposed to gold. Now, I think it would be a good idea if they did both. Not so crazy about the idea of selling gold in order for the Bitcoin reserves. They are two different asset classes. And I think that there's strength in diversity of country having multiple assets as their reserves because the reserve currencies, which is normally what they would hold for diversity, is either loans from other countries or their bonds, basically, or the currencies themselves, which is what they trade and liquidate between the two. Now, just to bring this into focus, as they need to trade for goods, they either need to hold the loans as a backing or the currencies in order to purchase those goods for the trades. Now, the reason that's not such a big deal in the United States is because they hold the US dollar as a reserve currency. But as the importance in this is because other countries are forced to hold US dollars for this very reason. Now, if they have to shift with their currencies, that could mean a dumping of the currencies onto the market, which would, of course, distort the stock markets even further than they are distorted now. So, a little bit of a look at, aside from all of these manipulations between the markets, stocks are overblown. They're in a bubble. We've got the real economies, which are really highlighted by number one, inflation, what people are able to purchase and work for, and number two, the jobs. So we've got side hustles are becoming a necessity for many Americans. We've got the divergence of the two classes, upper and lower class. And this is a global thing. We're watching this not just in the United States, but also in the UK. Job vacancies falling the most in 4 years. So jobs not available anymore. And what they call their worklessness crisis is rapidly spiraling out of control, meaning they've got more people without work. They are on the public system, growing at a more rapid pace in many years now. So as we're saying, spiraling out of control, this is the same issue United States will face and what precedes severe recessions, or as they go into a severe recession, you call it a depression. So we are watching the precedents of a depression beginning over in the UK. Now, the mother of all bubbles in the United States, sucking money away from the rest of the world, market expert, they are quoting Mohammed El-Erian. Now, he is the chief economic advisor to Alliance, and he did an interview with Bloomberg TV, and he is highlighting this currency exchange bubble going on. Now, this is all based on what we call American exceptionalism. Now, the world globally is putting more money into a single country, meaning the United States, than ever before because the United States stock market has outperformed the rest of the world 4-1. Now, this is massively distorted. We've got investors are moving out of smaller markets and they are pouring their money into the United States markets. And that's why we look at that fear greed meter and keeping an eye on that because America is now over-owned, overvalued, and this is a very severe issue that could imbalance itself very rapidly. Now, United States global dominance is still increasing right now, for, as he says, both good reasons and bad reasons. But a lot of this is all backed by the military. So let's go into a little bit more of what's going on with the military and the spending. Now, the real economy, as we've spoken about before, between the jobs and the GDP, now gross domestic product for the United States, is not in production for goods necessarily. It's really backed by war. We're in a war economy. Now, here are the examples. Kiev's access to Starlink now has been extended. He has just won a military contract for this. We've got the terms of the $20 billion United States loan. That's correct. $20 billion. Now, this is a scam of epic proportions, because what they have done is they have done this loan based on the Russian reserves that were basically seized. Now, all of the assets of that are what is backing this loan. What does this mean? This means that if Kiev defaults, which they've already planned on defaulting, then the United States will take the reserves from that Russian assets as their own. So this is a way to seize the Russian assets and take it for themselves. And before you think it's just the United States, there is also a portion of this going to the EU. So they've made sure that they are in on this deal as well. It's an awful deal. So it's a loan over a 40-year period, and this is backed by the G7. So this is also another reason why Putin did not go to the G7. Other members that are in on this $20 billion European Union commitment will be split by Japan, Canada, and UK. So they're all in this together, and this was a strengthening Ukraine Financial Intermediary Fund established by none other than the World Bank back in October. Now, World Bank is largely run by the United States. So another major scam in order to get these frozen Russian assets. So with everything going on in Syria, we've also got Israeli tanks entering Syria for the first time in 50 years. Now, they went to the top of Peak just outside of Golan Heights in Syria, and this is kind of in precedence for a land grab. Along with this, United States took no time in striking over 75 what they are labeling as ISIS targets in Syria after the regime collapse, or as they're going to call it now, regime change. So with all of this, we've got Russian oil chief warning that gold already is the largest rival to the US dollar. Taking it down eventually, we'll see what happens with this and how rapid it happens. Now, we've got the economist Jim Rickards is actually agreeing with this, that BRICS already has their common currency. Of course, that's gold, with also a little bit of a basket of oil behind that. So with all of this going on in the background, what does this mean for the United States? Number one, continued inflation. That means that your cash will continue to lose value. Prices will continue to rise. This includes stocks until something major happens to shake this market. So right now, even though they're a little bit shaky, we are continuing with this increase into the market. So with this, wish you all a green trading day. Until I see you again, stay free.